Welcome everyone again to this Hidden Gems webinar. Not a lot to say, but what did we see last week? Well, last Friday, post our webinar, we kind of saw the first signs of a pullback in the market, which was pretty sudden and volatile. And for new investors, expecting stocks to rise 100 to 200%, that's not the norm. And what they really experienced last Friday was a kind of a 50% pullback in some of their small cap portfolios and individual names. And looking through the comments on Reddit or Hot Copper or the Facebook investor chat sites, you could really feel the panic. And what investors don't understand is really how to manage a position, when to sell. And after a stock has risen 300% or halved over the course of a day. So there's a real inexperience in the market from new investors. And understanding kind of when to sell and how to manage a position comes from an experience of which new investors have very little of. More importantly, these new investors in the market really have a less diversified portfolio, which is always far more volatile than the index. So you can really feel their panic. And while retail investors kind of trade for free or for $10 a trade, having an experienced broker or an advisor can be critical at times in this market. So while they may cost a little bit more, you need to pay for experience and advice. Because in the long run, there are very few professional traders in the market. And we've all been in this market a long time, some of us. And I know that there are very few traders who actually do this for a living. So don't quit your day job and trade for a living. Seek experienced advisors and brokers when necessary. Take money out of the market and use managed funds and ETFs to reduce your risk. Because this isn't a normal environment. This is more like 1987 or 1999. And if you've made really good money, it's the market that's really done the work for you. You most likely got lucky. So be careful out there. As I said, this is not a normal market environment. Now, if you want to ask questions of our presenters, type them in the Q&A box. There's CPD for our financial advisors and brokers online. And if you want to know where all these webinars are, we now have a YouTube channel, which is becoming really popular. So first up today, we have Taurian Resources, ASX code TNR. It's got a market cap of around $28.5 million. It's got a one-year return of about 330%. The company is a highly active gold exploration and development company with extensive and strategic land holding out in the goldfield regions of WA. We have with us one of the executive directors, Pret Shapiro. Pret, over to you. Thanks for your time.
Thank you, Tim, and thank you for inviting me on today. If we could just go through these slides. If you get the next slide, thank you. I'm going to touch on, as we go through these slides, there's quite a lot of detail, but due to time constraints, I'm just going to speak in a very high level. If you want further information, you can look through these slides in more depth yourself. Further, I'm going to try and break it down into a layman's perspective. I know many people that are watching today aren't seasoned geologists, so I'll try and break these terms down as simple as I possibly can. So just to focus on 2 or 3 points on this slide here. Number one, in the last 4 or 5 months or so, Taurian is still in the process of over a 15,000 meter drilling program out at our Mount Sterling project. And we pride ourselves in that because at the time when we started, we were just a 10, 12, $13 million market cap company. And many companies of our size may just spend, 2 little programs a year, 2,000 or 3,000 meters here and there and hope they get lucky. Whereas at Taurian, really believe that we make our own luck through hard work and capitalizing on opportunities. And we're really actively working really hard through our drilling program, and we are starting to see some excellent results. A couple other points here. That program is obviously, as I've said, is ongoing. Results are constantly coming through, and every week or so, we are receiving results from our labs. That's generating some great news flow for us. And I will ask you to move to the next slide. So here's our corporate overview. A couple of points to touch on here. Importantly, the top 10 shareholders plus our board hold over a third of the shares on issue, including Nova Minerals, who are our largest shareholder, has over 13% and have continued to support us and have verbally said to us numerous times that they're very happy with our progress and will continue to support us into the future. In terms of our cash position, we have approximately $2 million or so in cash, and we have been offered numerous opportunities over the last couple of weeks, especially as our share price has increased in terms of raising capital. So just to answer people's questions, and I know that we have been getting some questions from shareholders. If we look here, we have about 440 million options due to expire next year, and they are well in the money. We'd like that to stay that way, and that's going to bring us $9 million into the company once that happens. So between now and then, we aren't, whilst we potentially will need to raise some capital into the future over the next 12 months, we do want to keep that minimal. And we aren't looking to raise any money at this stage, particularly as we have our resource upgrade, which is due in a couple of months. So unless something absolutely extraordinary happens, we believe that we're well funded for the next, straight through to our resource upgrade and beyond, and are looking to keep dilution to a minimal due to that $9 million of cash to come through from those options. We'll go to the next slide, thank you. So talk a little bit about our projects. We are, as mentioned, we're an active gold explorer. We're going to focus on one main project today, and that is our primary focus, and that is northwest of Leonora, the Mount Sterling project. Importantly, all of our projects lie within 50 kilometers of major mining towns, so infrastructure now and into the future is not a concern for us, which is an added advantage of what we have. We can go to the next slide and go to the next one. Thank you. So let's talk a little bit about our main project, the Mount Sterling project. As we can see here on the right-hand side of the screen, in the pink, that's Torian's tenements, and in the white is Red 5 tenements. As you can see that they surround us, and that is their King of the Hills mine to the east. That's a 4 million ounce mine, and that's going to be restarting production very soon. Importantly, within our tenements, we have the Sterling Block to the north and the Diorite Block to the south. Within the Sterling Block, you'll see two little blue dots. That's Mount Sterling and Sterling Well. We currently have two smallish resources, two smallish JORC resources there, and we're working on, as we'll touch on now, proving up those resources and expanding those resources. Whereas within the Diorite Block to the south, that is where that is more blue sky opportunities, and we have engaged in some drilling there as well, as we'll talk through. Next slide. Really important from a geological perspective, if you look at this picture on the right-hand side, you'll see what's called the Ursus Fault Zone. Now that Ursus Fault Zone runs straight through the Sterling project, and that Ursus Fault Zone is connected with the King of the Hills mine, as well as the Gwalia mine and the Tower Hill mine, all within the region. So it's a really, really prospective zone. There's a number of targets along that zone, and that's where we have seen incredible potential as we continue to look in that area. Next slide. And next slide, thank you. So this is what we call a long section of the Mount Sterling resource. And a long section is, to imagine you are standing facing the face of the resource. The dotted line there, which is a bit difficult to make out, but you'll see a dotted line there. That is the area of which the previous 34,000 ounce resource was done. And many of those holes that are there now, those are holes that we've drilled and received results from during this current program. If you look to the, on the left-hand side, that's the southeast, and the north, and on the right-hand side is the northwest. We've done a number of, quite a bit of drilling from the southeast, and we're continuing to drill over the northwest. And what we found so far, this was announced this week, that we've actually confirmed already a 600 meters strike, so 600 meters length of the deposit from the southeast to the northwest. And we've also confirmed that the resource runs at least 250 meters at depth. So that depth is also really important, because that actually tells us that what we have, if it does continue to run at depth, that's quite similar to the Gwalia mine and the Thunderbox mine, which is in the region and quite prolific producing mine. So we are expecting a number of these results from the northwest to come as well over the coming weeks, as well as what we call the guts of the previous deposit. That's going to be coming in the coming weeks. And during that period and over that period, we're expecting to continue to increase the length of our strike. We go to the next slide. So if we look at this is a cross section of one of the more prospective zones at Mount Sterling. And what this is how we've seen, as I mentioned earlier, we've just done a diamond drill hole down there towards the bottom. You'll see MSRD001. And that diamond hole has pulled up some really, really promising looking mineralization, which was announced earlier this week. And again, should that prove to contain gold ounces, that would significantly increase the size of our resource, which we're expecting a resource upgrade estimate to take place in later on in this quarter, and which would take in as much of the drilling results as we've got until this point. And then we'll continue to drill out there at Mount Sterling, and we're looking at an additional resource estimate for Mount Sterling in Q3 later on this year. Next slide, please. So this gives you a little bit of an understanding as to the length and the strike of our deposit. If you look at that that red mark in the middle of the picture there, that is what is the previous resource or the current resource. That is the area of the current resource. And as you can see, significant drilling both to the southeast and to the northwest. And we're fairly confident that the strike actually goes to about 1.25 kilometers, which is really significant considering that the average strike of a gold deposit is about 140 meters. So that's really, really exciting for us. And additionally, we've also found that there's some historical holes a further kilometer to the northwest with some gold grade. So potentially this strike actually continues for over 2 kilometers, which will just be extraordinary. Or if not, we are expecting that there's what we call structural repetition. So a similar geology which exists here would also exist further up along that Earth's fault zone. Additionally, about 1 kilometer away to the east, there's another fault zone there, which you might be able to see, that black line. There's about 5 or 6 historical shafts there as well, which historically did get some gold out there. Again, that demonstrates the potential for multiple repetitions. So whilst we're looking at Mount Sterling now as our key resource area, there's potential for multiple similar deposits within our tenements all along that Earth's fault. Next slide, please. This is Mount Sterling Well, a smaller deposit, which I mentioned earlier. It's about 16,000 ounces. We did conduct a drilling campaign there a couple of months ago, and we're expecting results from about 18 holes there over the coming weeks. We also expect an upgrade in the JORC resource in the second quarter of this year of Mount Sterling Well, and it is possible that Mount Sterling Well actually links up with Mount Sterling at some stage. Next slide. Next slide. I mentioned the Diorite Block, which gives us a lot of blue sky and some great potential also within our tenements as we continue to grow this company. So the Diorite Block is centered around some really high-grade historical mines, 563 grams per ton Little Wonder mine. We did drill about 21 holes toward the end of last year, and we're actually sending, because of what we encountered at the field, we're sending those drill holes through to multi-element analysis, potential for copper as well as gold, and that will also help us vector into the gold. So that's some great upside there at Diorite, and we're excited to release results when they come through, because again, Mount Sterling alone is incredible, and if we have that kind of structural repetition throughout our tenements, then that's really, really exciting. Next slide. And next slide. So this is our little some equipment that we purchased recently, where we have our geologists really driving up and down in that Polaris throughout our 70-odd kilometers square of tenure at Leonora, using that PXRF, which is essentially a little machine which is able to zap, so to speak, the soils and the rocks that are picked up on the ground, and you can really map out the ground and use that to systemically explore and also to create targets for future drilling campaigns. And so far we have over 50 high priority targets and 200 targets just on the Mount Sterling block. So there's ongoing exploration, ongoing drilling. As I said, we work hard and we don't rest. Next slide. So recently we entered into an option agreement to acquire the Tummel Station, which encompasses much of our Mount Sterling project. The Tummel Station includes a number of operating businesses, including a mining services business, an accommodation camp, which are all cash flow positive. And the purpose of acquiring that station would be that it gives us, first of all, the cash flow from those businesses. It brings our cost per discovery per ounce down, because of course we would own the accommodation camp where we would be, we would own the earth moving equipment, so the mining services equipment, etc. And also there's $360,000 per annum in carbon credits, which come along with that station. So we're looking at the moment, we're still going through the option period. We are looking to minimize shareholder dilution, as I discussed earlier, and as such are looking to fund the majority of this acquisition, if possible, through debt. And we are at the moment conducting our due diligence of that. Additionally, the station also will essentially become our own landlord. So anytime we need to do anything, then for future exploration or mining permits, we're in control of that. So it does create a more seamless process. So the station acquisition is a little exciting addition to what we have going on at Torian. Next slide. Here are some of the other major mining companies at the station. Again, from a strategic perspective, it gives us great negotiating power with our neighbors, and we look forward that if we do proceed with the station acquisition, to have an excellent relationship with them moving forward. Next slide. One of the things that we've done at Torian over the last year or so, Torian historically has collected a lot of land and a lot of great projects. However, as a small company and with limited resources, we are looking to capitalize and focus on one or two main projects, and we've decided to focus on the Mount Sterling project, which is proving beneficial. As such, for the other projects, we are looking to if we were to explore those as well, it would mean that we'd have to raise additional cash, further dilution, and we typically don't have the resources to have multiple exploration projects going on at the same time. So to maintain shareholder exposure to the upside of these projects, in addition to minimizing the dilution, what we're doing with Mount Monger, for example, is we propose a spin-off of Mount Monger to its own listing. Torian will hold approximately 10% of that new company and maintain a JV interest of 20% in the project itself, and that way we retain shareholder upside. Shareholders would get priority access to that IPO should it go ahead in the coming months. Next slide. And on that note, we've got a number of projects in JV with Dampier Gold, soon to be renamed Zalika Gold. They're well funded. They've just raised $5 million in cash, and they've just announced a 30,000 meter drilling program through those projects. That's Zalika and Crater Well, a highly prospective area. Again, that's just upside for us. Depending on the projects, we have either 25% or a 50% JV interest, which is free carry pretty much at this point. So we're excited for what they have in store there. We're not actively involved, but look, if they do have some really nice hits out there, that could only mean upside for Torian. Next slide, and next slide, and next slide. And thank you very much. As I said, I've gone through it quite quickly. There's a lot more information there. If you have any more questions, I know there's going to be a Q&A now, but for further questions, you could always get in contact with us directly, and we're happy to hear from our shareholders and anybody else that might be interested in the company.
Thanks, Peretz. We've only got time for one question, to be honest.
Yeah.
You've mentioned some big names there as neighbours, Red 5, Northern Star. How closely are they watching what you're doing?
Well, look, I mean, it's like any neighbour, like in any business, I'm sure they'd be watching very closely with what we're doing, particularly Red 5, as they have tenements all around us. And if we are successful in proving up a significant deposit, well, does what that would mean for them, I guess, first of all, for their tenements, which are in the area as well, that might mean their tenements become more prospective. And, you know, should there be any further corporate activity, I guess that's a question really for them. But yeah, as I said, we're happy to have discussions with anybody that would like to talk to us if it's accretive for both parties.
Great, thanks for your time. I'd like to follow up with you. There's a lot to get through there, so we might catch up during the week. Thank you.
No worries.
Next up, we welcome back European Metals, ASX code EMH, market cap 225 million, 1 year return of 280%. The company is an Australian and UK listed mineral exploration and development company, advancing in the lithium and tin project in the Czech Republic. We welcome back the executive chairman, Keith Coughlin. Keith, you've just raised $7 million. Congratulations. Over to you.
Thanks, Tim. Thanks for having me on the program today. Yes, our disclaimer. I'd like to talk to you, as Tim said, about Cinebets, our lithium project in the Czech Republic. Just quickly on the macro, lithium has obviously had a good run in the markets over the last 6 to 9 months. A little bit of a resurgence based on a few macro factors. Following on from the fact that I think the sector was largely oversold in 2019 and into early part of 2020. But the macro factors globally have been just a dramatic increase in the number of electric vehicles that we're seeing and that are projected into the next few years. And for us, it's really...
Keith, excuse me, can I just ask you to speak up a little bit? It's a bit hard to hear.
How's that? Any better? Hello?
Yeah, maybe a little bit louder if you don't mind.
Okay.
That's better.
All about where we are in the European Union. So the growth in demand for lithium in the EU is going to grow faster than anywhere else in the world, at least out until 2030, based upon the projections for the number of EVs to be built in the area, in the region, and the enormous support being thrown behind the development of a new battery industry in that part of the world. And this is a region that has no current production of battery-grade lithium products. So that's really the premise for where we are and where we're going forward. A little about the project itself. So as you see from this slide, Cinebets is the largest hard rock lithium resource in Europe. Importantly, it's by far the largest in the EU. That's an important distinction given the support from the EU for this project, this industry. It's the 4th largest non-brine lithium resource in the world, so it's a very large resource. We've done 2 PFSs on the project. We'll be a bottom half cost producer, bottom half of the global cost curve for either battery-grade lithium hydroxide or battery-grade lithium carbonate. I have a map in a moment to show you exactly where it's located, but within 500 miles of the project, there are about 6 million vehicles made every year. And obviously every year, more and more of those vehicles are being made electric. At various stages during 2020, Europe overtook China in terms of production of electric vehicles, and we expect that trend to continue. And the final point on this slide is we've entered into some significant strategic partnerships in 2020, the most notable being taking ČEZ, the Czech power utility, on as our partner level project in February, March of last year. They injected almost 50 million Australian dollars into the project at that point. And so the project itself is fully funded now through to our final investment decision, expected in a little over a year's time. Next slide, please, Tim. The 2 partnerships I referred to, the CEZ Group, ČEZ, as I mentioned there at the top, and at the bottom, EIT InnoEnergy. So EIT InnoEnergy is an arm of the European Union. It's the principal facilitator of the European Battery Alliance. And their job, if you like, is to ensure that the policy and the money that the EU has put aside for the development of a battery industry and the development of the region's critical raw materials is put to good effect. So from our point of view, they're actively involved in assisting us in funding the project, in introducing us to potential off-takers, in assisting us with messaging, permitting, and just in general ways getting the project forward and into development. Next slide, please, Tim. And a little more on ČEZ that I mentioned earlier. I won't read all of these slides in the interest of time, but ČEZ are heavily involved in green energy. They're involved in wind farms. They own all of the EV charging stations throughout the Czech Republic. They're a public company with a market cap of around 11 billion euros. So a very good partner for us. Tim? This is the map I mentioned earlier. You can see us there, the red dot in the middle of the screen. and all the household names that surround us, very big auto makers, all of which are going EV, very big battery manufacturers, cathode makers, etc., etc. Every time we do this slide, someone else appears on it. It's a fast-growing space. Next slide, please. The project summary. So Cinovets is a historic tin mine. Tin has been mined here off and on for nearly 600 years. We will be re-entering an existing underground mine. So from that point of view, low impact from an ESG perspective, which is becoming more and more important. We'll have a large bulk underground mining operation. The front end of our process will be conducted underground, again to lessen the impact, the social and environmental impact, and then a slurry pipe of our lithium concentrate to a nearby processing plant. Tim, next slide. The infrastructure itself, as I mentioned, it's a historic mining area. Everything that we need is in place, power and water, road and rail, and there's a mining workforce, which is very important. It's a historic coal mining area, so we will be retraining coal miners to become lithium miners. This is very much in keeping with the EU's transition from coal-fired energy to green energy, and that's something that the EU is strongly supporting in a number of ways, including in grants. Next slide, please. A quick snapshot of the process here. It's a very simple, straightforward extraction process, very similar to any spodumene concentrate extraction process you might see. Our host rock is not spodumene, it's a mica called zimbaldite. Most people who follow the lithium space are very familiar with spodumene and the processing route here. And this slide simply demonstrates the similarities between our processing route and that of spodumene. We do have a couple of advantages which assist us with costs and also assist in helping lower our CO2 footprint, both of which are very important considerations. I think all mining projects are going to come under pressure to demonstrate their environmental credentials in the coming years, and our process assists with that, as does the fact that we are located very close to our end users. The whole world has had a shift back towards the importance of local supply chains with COVID and other factors during 2020. This not only assists in the form of mineral security and also in costs, but it also helps very much, obviously, with your CO2 footprint if you're not shipping vast quantities of materials from one side of the world to the other. The next slide shows our most recent preliminary feasibility study, which we conducted in June of 2019. It showed an NPV of this project after tax of $1.1 billion and an IRR of nearly 29%, also after tax. Importantly, the fact that we can produce battery-grade lithium hydroxide net of our tin credits for just under $3,500 a tonne, as I mentioned earlier, puts us very much in the bottom half of the global cost curve and very much underlines the financial credentials of the project. This study is currently being updated to a definitive feasibility study, the results of which we'll have in about 12 months. At that stage, the project will become bankable, and that's when we'll start raising the money or conclude raising the money to go to construction phase in about the middle of that year. Next one, please, Tim. So what we need to do in the next 12 months, as I say, we're well into this definitive feasibility study and the associated studies regarding that. We are about 2/3 of the way through a drilling program right now. That drilling program is designed to help us bring a larger part of our resource into the measured category, which is all about funding the project, all about giving more comfort to the debt providers. There are a number of key studies within that DFS that we'll be ticking off as we go through the early stages of this year and obviously announcing those results to the market. But probably the key for us in the next few months is to secure offtake. Very important for a lithium project to get offtake ahead of financing the project. And I think we've all seen the very positive effect on some other lithium stocks listed on ASX over the last 6 or so months when they've signed offtake agreements with big, well-known battery makers or electric vehicle makers. Next slide, please. As I said to you, the lithium space has had a good run over the last 6 to 9 months, and you can see that reflected in our own share price. Our market cap currently is shade under 200 million Australian dollars. The best way to look at that in terms of value and where we're sitting on our own value curve, we own half of a project with an NPV of 1.1 billion US. So that's 550 million US, or about just over 700 million Aussie dollars, versus our market cap of 200. All companies tend to trade a little at some sort of discount to their NPV. We're 12 months out from final investment decision on a project that's fully funded with significant partners and no foreseeable barriers to getting into production. So I think you've got to look at that market cap in light of that value, and I think we are trading at a significant discount to the sector and a number of our peers. Next one, please, Tim. So here's the summary, almost right on time, I think. Largest lithium resource in Europe, by far the largest in the EU, in an area in which the demand for lithium is going to grow very strongly out until at least 2030. Project that's fully funded to final investment decision with significant partners and the active support of the European Union, who's supporting this industry in a very, very strong way, both financially but also politically with policy and legislation. I think we're in a very good position and looking forward to 2021. And I'll wrap it up there. Thanks, Tim.
Thanks, Keith. Good timing. A couple of questions. You recently raised around $7 million, and there was a global ESG fund as part of that capital raising, took up shares. What spurred the interest, particularly this year, from those sort of funds in lithium companies?
So as I see, the resurgence in the lithium space last year came from a number of macro factors, but there's a very, very strong global push towards green energy, being well aware of your CO2 footprint and all ESG considerations. And this is particularly strong in Europe. It seems to be stronger in areas where, there's greater population density and a great awareness of the environment, looking after the environment. So there are a number of these funds that have been established over the last 12 to 18 months. The attraction to us is that these are the sort of funds who we don't think are coming into the lithium space or into our project just because it's a hot sector and they're looking for a quick flip. I think these are people who we expect to be long-term shareholders of the company, who we expect to be able to go back to at some stage over the next 12 months when we are looking to raise our portion of the equity component of our CapEx, which will be a significant amount of money. And these are the sort of people who understand the space, understand the project, coming in for them in a relatively small way to begin with. So the fund you're talking about, Thematica Future Mobility, contributed 5 million Aussie dollars to that 7 million raise. For them, that's a relatively small investment, but if you like, that's a start so they can get to know the project, get to know the sector better, and hopefully that means they'll be there for us when we need the big money later in the year.
And in Australia, we kind of see the local fund managers are invested in the spodumene players, which have a higher carbon footprint in terms of the extraction of lithium and export of lithium. Do you see a kind of switch coming where those fund managers investment?
I think potentially we will see that. I mean, obviously, as a fund manager, your first responsibility is a return, making money for your stakeholders. But as ESG considerations, CO2 considerations become more and more important globally, a lot of funds will switch to this sort of investment because of the fact that it is seen to be more environmentally friendly. The spodumene concentrate story here in Australia, WA in particular, it's a reasonably simple business plan. Dig up the rocks, beneficiate them, send them to Asia. And it's obviously something we've been doing in iron ore for decades. It's an understood business plan. Ours is a little more complex. We'll be going right through to end product, going right through to lithium hydroxide, and then selling that directly to end users whose is 100 or 125 miles from us, in the project site. But, it is becoming more and more important. Currently, there are funds who specifically target this sort of investment, but I think that sentiment will start to permeate through all fund managers over time.
And just one last question, kind of, why you can't disclose these exact details of offtake discussions, can you broadly talk to the level of interest?
Yes, look, I think that the best way to look at this is to look back to Tesla and Battery Day. And, the things that they said then at Battery Day from a macro point of view, and then also the fact that they entered into an offtake agreement with Piedmont, a development company at a similar stage to where we're at. And really the first strong indication that the sector is understanding it needs to look outside the major producers of lithium, the historic sources, needs to look outside those people going forward, because the demand is going to grow so quickly. And the awareness that, the industry has to support development companies in getting into production to ensure there is going to be enough supply going forward. And I think that's a large part of what we're seeing. Europe is a very conservative business place. We've seen here very strong interest in our spodumene industry from Asia, from China in particular. Now we've seen American companies coming into it, and I think Europe will follow, but there's just that natural conservatism that means everything happens a little slower.
Great, Keith. Thanks for your time. Nice to see you. We've got a few more questions, so I'd love to catch up as soon as we can.
Thanks, Tim. Appreciate it.
Okay, see you later. Next up, we have Antisense Therapeutics, ASX code ANP, market cap of around 110 million. The company's had a 1-year return of 180%. The company is a biotechnology company developing and commercializing antisense pharmaceuticals for large unmet markets in rare diseases. Mark, great to see you again. Over to you.
Thanks, Tim, and thanks to the team at ShareCafe for the opportunity to present on Antisense Therapeutics again. The slide that we have up on the screen highlights the company has a market capitalisation of around 110 million at 19 cents. In December of last year, we had a very successful capital raising where we raised 8.5 million at 10 cents. So also this slide shows the significant rally that we've had in the share price post the financing, and I think that's due in large part to the tremendously successful year that we had last year from a development perspective, but also the infusion of this critical development capital, which will allow us to continue to build on that tremendous success to date in the development of our antisense programs. Next slide, thanks. So the company's based in Melbourne and is laser focused, if you like, on developing and commercialising our 2 drugs that we have in a clinical development. We call these drugs AT1102 and AT1103, and both of these drugs have completed now multiple successful phase 2 clinical trials. So we have, by any peer comparison, a very advanced and therefore de-risked clinical pipeline of drugs. Our major shareholder is a renowned institutional investor in life sciences, Platinum Asset Management. They are a fund that has now, I think, over $24 billion in funds under management. They've been a shareholder with the company since we first started what's our lead program today in Duchenne Muscular Dystrophy, and I'll go through that in more detail in my presentation. But they came on board when we were first looking to start that clinical program, when the company had a market capitalisation of 5 million and about 500,000 in the bank. So they've been there supporting us all the way through multiple financings, fortunately all done at higher prices, and participated in the most recent financing at 10 cents. So we're delighted to have them there as our major shareholder. and to have received their support to date on our programs. As I said, lead program is in this disease, Duchenne muscular dystrophy. Given the time constraints today, I'll just focus on that indication, and it's appropriate because it's the program that's led to this stellar increase in value in the company, and we think will also be the driver of continued significant growth in the company based on the very very good data that we've generated to date in this program. Next slide, thanks. So, look, it is no understatement or hyperbole to say that 2020 was a transformational year for the company, and you can see that on the slide, evidenced by the significant achievements that we had in the year. And important, I think, also to recognise that all this development progress was done when we were under very severe lockdown here in Melbourne. So I think a testament to the experience and let's say the tenacity of the Antisense Therapeutics team to be able to deliver all these significant achievements in the period. And I'll just sing out a couple of the most significant there were the really exceptional data that we reported from a phase 2 clinical trial in Duchenne's patients. Again, go into a little bit more detail in my presentation on that. We got rare pediatric disease designation in the US. We got orphan drug designation in the US. We presented some new data at the biggest scientific congress in Europe where D&D experts meet, and that data got a tremendous reception from the experts at the meeting. We're listed on the Frankfurt Stock Exchange. We've got European drug designation and capped it off with that successful capital raising at the end of the year. So what's important to note is that the financing that we completed at the end of December will be put to work on these key activities that we've listed here. So building on the success to date, funded to be able to deliver on continued development progress. So, we're really excited about where the company's sitting at the present time. And I think that, again, is kind of reflected in the way in which the share price has been responding to this positive news. Next slide, please. Next slide. Thank you. I guess, also important to note that broad research coverage, analyst coverage that we've received in the period. And this is from some of the biggest broking houses in the country supporting life science companies. And, I don't think it's a stretch to say with some of the most highly regarded biotech analysts in the sector. And there's no doubt that this validation provided from these research reports has had a positive impact on the share price. Next slide, please. So further to this, Mark Sinatra from Corporate Connect, again, very well regarded in the sector for his experience in being able to analyse biotech stocks, put out a flash report recently, and he was reporting on what was a setback for a potential competitor, a company called Sarepta, market cap in US-based company, market cap of over 8 billion, who are purely focused in developing drugs for Duchenne muscular dystrophy, had a significant setback in one of their clinical trials. So Mark's sort of reported here on what's bad news for Sarepta is good news for the company. You see he has increased his valuation target as a consequence. So no time really to go through this today, but just encourage anyone, if they've got the opportunity, please do visit our website, because we have all these research reports there on the website for those interested in reviewing the details. Next slide, thanks. So Duchenne muscular dystrophy, this is the focus of our lead program. It is a genetic disease of boys. It causes muscle wasting in the boys due to the inflammation that the boys have in their muscles that leads to muscle injury and eventually muscle death. Today, the disease is 100% fatal, so all boys with Duchenne's will succumb to the disease. The goal of therapy is effectively to slow that steady and progressive muscle wasting and loss. Today, the only way that inflammation in the muscles can be addressed is by using a class of drugs called corticosteroids, first approved over 60 years ago. Now, these corticosteroids have very modest activity or efficacy, but come with some very substantial downsides in terms of their side effects. You can see them listed there: weight gain, mental and growth retardation, osteoporosis. So there is a desperate need for improved therapy for treating inflammation in these boys. As I said, it's over 60 years ago that this class of therapy was made available for patients to treat inflammation. We're looking at a better way of treating inflammation. That's the goal of our drug, AT1102. Next slide, thanks. So we studied AT1102's activity in boys with Duchenne's, and in a study that we ran at the Royal Children's Hospital here in Melbourne, which run the biggest clinic in the Southern Hemisphere, treating boys with Duchenne's. The study exceeded by all our expectations the anticipated outcomes that we thought were achievable with the trial. First and foremostly, drug was shown to be very safe, well tolerated, which is a key feature of a drug if you want to advance it into late stage clinical development, which is the plan that we have for this drug. So the drug was shown to be safe, but was also very exciting is we're able to show that we could actually stabilize in these boys that progressive muscle loss through the drug's effects in stabilizing the upper limb function in the boys that we were assessing, who were boys more advanced with the disease and who were now in wheelchairs. So we're able to show we could stabilize and in fact improved in some of these boys their motor strength and function. The data that we generated has had a tremendous reception, not only from the market, but also probably as important from key opinion leaders, those that are treating boys internationally with Duchenne's, who have given us great feedback on the quality of our data and the view that this drug could find its way to market. Next slide, thanks. So on top of that, we reported some exceptional data at this Congress in Europe. The key take home from this slide is that we were able to show boys having an improvement over an external control of boys who weren't on our therapy on a key parameter for assessing the approvability of these drugs. So this data, effectively, if it was repeated in a longer study in more patients, could potentially see the drug approved. Next slide. So that's exactly our intention, to advance this program into a longer-term clinical study. We're well advanced in our plans for a study to run in Europe. This study, we are looking to design it to be a potentially approvable trial. And potentially one study away from being able to market the drug in the second biggest pharmaceutical market in the world, being Europe. We're expecting, we're working on our regulatory data now for submission. All going well. We expect to have approvals coming through around the middle of this year. In parallel, we're working on our plans for the US. We're currently preparing for a meeting with the FDA to confirm with them next steps for the development of the drug, and we're anticipating that meeting to happen towards the end of this quarter. Next slide. Last slide then, just talk a little bit about the market potential. Couple of aspects here to focus on. Firstly, the Duchenne's market is enormous. That's why a company like Sarepta is able to maintain a market cap of $8 billion when they're purely focused on that therapy. They have one drug effective for only 20% of boys that have the disease, selling now approaching nearly $500 million US in the US only. So it's a huge opportunity, premium pricing for the drugs. But when we think about our drug H1102, we've got to think more broadly than just the Duchenne's market, because this drug, we believe, has exciting potential beyond the treatment of Duchenne's into other inflammatory disease indications. Based on the data we've generated to date, not only in Duchenne's, we've shown the drug to be active in multiple sclerosis, in multiple settings of inflammatory disease. And you can see here global anti-inflammatory market is poised to tick over $200 billion annually in sales. So for our shareholders, this should come as very exciting news about the potential sales potential of this drug should we continue to be able to successfully advance the program. Next slide, thanks. And just finish by saying, as I said, we're expecting to build on the tremendous achievements from 2020, as identified there, and looking forward to the news flow that we expect, significant news flow that we expect in the short to medium term as we advance our program in Duchenne's muscular dystrophy. Thanks, Tim.
Thanks, Mark. Great presentation. I could sense the excitement. And a lot of the questions you've actually answered in that presentation, which is great. We note that you're listed on the Frankfurt Stock Exchange. What's the level of interest from offshore in your company and the drug?
Yes, no, thanks, Tim. So that's a recent listing. That was sort of late November that we went through the listing process. No, we've been really happy, with the response to the listing. The volumes are building steadily. We're getting outbound interest from investors overseas. I mean, the main driver for listing was that we expected to be, in Europe with a clinical trial that we were anticipating was going to generate more, interest, more visibility for the company. With all, what a great opportunity to leverage from that. We've employed a really expert advisory investor relations firm to manage that process for us. And when you think of the trading in Germany, it's not just what comes via the Frankfurt exchange, it's also Berlin and the other exchanges as well too. So the volumes are building, but we just think it gives us a sort of foothold, in the European market that we expect to build on.
And just quickly, Mark, as I said, you've answered a lot of these questions. The addressable market size in DMD therapies, and what are the potential spin-off applications for the drug? I know you touched on it on that last slide. Can you elaborate a little bit more?
Sure. So there's about 48,000 boys with Duchenne's in the Northern Hemisphere. We presently focus on boys more advanced with the disease because they're more desperate for therapies. And they're what we call non-ambulant boys. They're about half of the population. So let's call it, 20,000 boys who today have no effective therapies for treating the disease. And you can see in the slide I presented, companies like Sarepta are charging, $400,000 annually for therapies which are only showing very modest activity in that disease indication. So, 20,000 patients, you're charging $200,000 annually. That's a $4 billion market opportunity. So that's, as I said, that's what's driving the valuations at companies like Sarepta. Other indications, Tim, look, they're as wide as you can think about the inflammatory disease landscape. So rheumatoid arthritis. You can think of asthma. You can think of these are the big indications. Where there are a need for better therapies. I mean, people have been talking about diseases like Alzheimer's, where inflammation is an important feature. But what we've told our shareholders is probably our initial focus will be to go to the, like in Duchenne's, into the sort of rare disease space where, there are no effective therapies, where we benefit from the incentives that the regulatory authorities provide for going into rare diseases, where you can look to command premium pricing with no competition. What we've been talking about are the neuroinflammatory diseases, Tim, like Duchenne's, and there's a number of those that present like Duchenne's where there's a need for better therapeutic approaches. So it's probably the low-hanging fruit for us, and then we look to expand into, the opportunities are abundant.
Great, thanks, Mark. We'll catch up again with some more content for ShareCafe. Have a great weekend. I'll speak to you soon.
Thanks a lot, Tim.
Next up, finally, we have Auric Minerals, ASX code AOU, market cap of 72 million. 1 year return of a lazy 290%. The company explores for and develops mineral properties. The Auric Saints nickel project combines both a historical high-grade resource and recent drilling results, which provide an exciting platform to grow the company's high-grade nickel resource. We have with us the Managing Director, Aidan Platel. Aidan, thanks for your time. Over to you.
Yeah, thanks very much, Tim, and thanks to everyone for tuning in. I'm here to give you a very brief update on Auric Minerals and our very exciting portfolio of high-grade nickel sulfide assets, in particular our most recent acquisition, the Nepean Nickel Project. So a quick overview of the corporate structure before I get into the projects. Relatively tight structure with only 270 million shares on issue and a great cash position of about $4 million. Key to note, in addition to that, there's around 40 million options held predominantly by a core group of investors. Many of these are top 20 shareholders. These have a 10-cent strike that expire in November this year. So effectively, we should see another 4 million in the kitty over the next 9 months. So we're really fully funded to maintain our aggressive exploration programs this year and well into 2022. So next slide, please. So what are we trying to achieve? Well, I guess our mission and what we're committed to is trying to get to that magical 100,000 tonnes of contained nickel in resource. We're very confident we can do this over the next 12 months, but certainly that's the key target that we're working towards. So how are we going to do this? First of all, through acquisition. We've carefully selected all of our assets and they all meet a set of very strict criteria within a globally significant nickel belt. Through growth, focused stream of resource drilling this year to define maiden JORC 12 resources at both Nepean and Leinster, and as well as that, upgrade our Saints resource to an indicated resource level. This then leads into the development phase and taking advantage of the significant processing infrastructure within trucking distance of all three of our projects. And we look to create value for our shareholders. So we're in advanced talks and agreements with strong partners such as BHP, as well as the focused exploration programs that we believe will lead to further significant discoveries of high quality nickel sulfide deposits. Next slide. So this is a quick snapshot of our very exciting base metals portfolio in Australia with a focus on our nickel sulfide assets in Western Australia, Nepean, Leinster and Saints. The table outlines the main criteria that I mentioned that we use to carefully select these assets. So all three are located in an endowed nickel sulfide belt, that is the Norseman Wiluna Greenstone belt. They're all Kambalda style komatitic nickel sulfide deposits. All three have existing high-grade nickel sulfide resources, albeit that the Nepean and Horn resources are historic JORC 4 estimates. All have significant thick, high-grade nickel sulfide drilling intercepts at shallow depths that highlight how the existing resources can really be increased incrementally by step-off drilling, along strike and down plunge. And all have exciting, high-quality exploration targets with real potential for new nickel sulfide discoveries, and many of these have never even been explored before. Next slide. As I mentioned, location was an extremely important attribute that we looked at, and hence all three of our projects are located within the Norseman Wiluna Greenstone belt, which for me is one of the best places globally to be exploring for massive nickel sulfide mineralisation. The projects are directly along strike for some very large, very high-grade producing nickel sulfide mines. And I guess with that comes the existing infrastructure. So all of our projects are within trucking distance of no less than 5 existing processing plants, 3 of which are owned by BHP. Our projects all have excellent access by road and the close proximity to Kalgoorlie, the regional mining centre of WA, which provides mining support to the whole region. And that's where we have our base office and core yard facilities. The belt still has enormous exploration potential. There's kilometres and kilometres of untested ultramafic stratigraphy and or geophysical anomalies, and much of this has never been explored with modern day exploration techniques. So a pretty exciting place to be for new nickel sulfide discoveries. Next slide. So taking a closer look at our project, starting with the exciting Nepean Nickel Project, quite an iconic mine, being second operating nickel mine in Australia, mining over 32,000 tonnes of contained nickel at 3%. From 1970 to 1987, when the nickel price fell to only $4,000 a tonne. There's a remnant resource there in the mine calculated in 2008, which has over 13,000 tonnes of contained nickel at a very high grade 2.2% nickel, which you can see here on the right. But importantly, there's real potential immediately along strike and at depth to build on that existing resource. So if you look at the next slide, just to add a bit of colour around the depth potential of Nepean, Nepean at its steepest point reaches around 500 meters from surface. Excuse me. There are cross-cutting pegmatite veins all through the mine area, but they hit a large flat-lying pegmatite vein at the base of the mine and stopped. And this for us drew an immediate analogy to Flying Fox, which you see there on the right. Outokumpu back in the day mined 8,000 tons of nickel from Flying Fox before they hit a flat-lying pegmatite, and they stopped as well. So Western Areas picked up Flying Fox in 2003, and via some drilling and geophysics and downhole EM, they found the continuation of the massive nickel sulfides below that pegmatite. And as you can see from this diagram, they've since mined over 100,000 tons of nickel, and they're down below 1,200 meters from surface, and they're still going. So it really highlights, as you can see, that untested area below Nepean really highlights the significant potential for Auric to add, and quite significantly add, to the existing Nepean resource. Next slide. The two other key areas of Nepean that we're really confident that can add and build on our existing resources. Firstly, in 2008, some drilling intersected a very high-grade zone of massive nickel sulfides at less than 50 meters from surface. It's about 200 meters south of the existing mine, and then that was never really followed up. So you may have seen from our announcement yesterday, we're currently a third of the way through a 3,500 meter RC drill program. First 10 holes were drilled to test the extents of this high-grade zone, this high-grade mineralisation, and to see if it joins back to the main ore bodies of the historic mine. So those samples are in the lab, and the first results are expected very soon. The other main focus of the drilling is really the main focus of all of our projects, and that's the 10 kilometres of untested strike to the north and the south of the mine. It's an excellent aeromag anomalies and or ultramafic stratigraphy extending the whole length of the tenement package, and the majority of this has never even seen a drill hole. So the rest of this current program will focus on the highest priorities of these targets to be drill tested and then surveyed with high-powered downhole EM. Just quickly, we also intend to explore the excellent gold and even lithium potential of this tenure, but we will use specialist contractors for these studies so that our geological team stays focused on the main nickel sulfide exploration. Slide 10, thanks. Moving on to our Leinster nickel project. Again, we have that great combination of known, shallow, high-grade, massive nickel sulfide mineralisation at the Horn, with some really high potential underexplored targets like North Sinclair, Firefly, Valdez. Recent drilling at the Horn, we confirmed the thick, high-grade, massive nickel sulfides less than 150 metres from surface, so very shallow, over a strike of 500 metres. But what that drilling and then the subsequent downhole EM surveys we did has really shown us is that that mineralisation is very clearly modelled by the magnetic high anomalies you can see there in the image, with the mineralisation really wrapping around the high and following the red edge you can see there. So the exciting thing about that is we have another four to five mag high ellipses to the northwest and another 2 to 3 to the southeast, and all of these have the potential to be another Horn, and yet none of those have been drilled historically. So pretty keen to get drilling into those mag highs. So we have a 3,000 metre RC program planned for this quarter to test those mag anomalies along strike, and as well as to get some holes into those greenfields targets that I mentioned earlier. And then later this year, we'll look to upgrade the Horn to a maiden JORC 12 resource. Next slide. Our third project, our third nickel asset is the Saints Nickel project, which has the largest and the most advanced resource of our three, with over 21,000 tonnes of nickel at 2% nickel, one of the highest grade resources currently on the ASX behind the main producers and behind Mincor. The resource is fresh, high grade massive sulfides from only 40 metres depth from surface, so an attractive resource as it is, but again with that great potential, great exploration potential to really build on this resource. Now the main game at Saints is to find that feeder channel to the nickel rich system, which the vast majority of known nickel sulfide deposits in this Norseman and the Greenstone belt have. So the probability of it being somewhere in such a nickel rich system is very high, and it's just a matter of systematically exploring the possible channels to vector in on it. And this is where we can really add some significant tonnes and grade to the resource relatively quickly. So we have a further 2,000 metre drill program this quarter to do just that. But starting next quarter will be a significant resource drill out program to advance the Saints resource to an indicated category so we can begin scoping studies and start looking forward to possible development and production. Slide 12. So looking ahead, a very busy year and certainly a very busy first quarter with significant drill programs at all three projects, targeting both resource and near resource targets, as well as potential greenfields discoveries. As mentioned, we're working to upgrade the Saints resource this year, as well as to find maiden JORC 12 resources at both Nepean and Leinster. And we'll continue to advance our negotiations with strong partners like BHP for toll treating and then possible offtake agreements. With such a busy program, we're in the process of bulking out our teams by adding more project geologists and a CFO. And we're also looking to add a strategic NED to the board with a wealth of nickel sulfide experience. So a big year and resulting, I guess, in plenty of positive news flow throughout the year. Next slide. So just finally, I'd like to touch on the nickel price. Obviously, we're very bullish on the nickel price, and the traditional stainless markets seem to be very upbeat at the moment. I guess with a lot of construction stimulus happening globally because of the pandemic, and major price forecasters such as S&P Global upgrading their nickel price forecast every month for the last 3 months consecutively. So very bullish on the nickel price. However, it's really the EV disruption that's coming, as Keith has been talking about. And that really provides the major boost for the longer term nickel price. And on that note, it becomes much more about class 1 nickel that you get from clean, high grade, massive nickel sulfide ore compared to the nickel pig iron and the nickel laterites, which produce an inferior product. So it's the class 1 nickel that we are targeting, and that's where the large supply deficit is forecast for the coming years. So that puts us really in a great position to take advantage of that nickel price and that class 1 nickel price. Next slide. So thanks very much for listening today. Please get in touch if you have any further questions.
Thanks, Aidan. Just got someone knocking at the door. A question, how do you pick up such great assets when you're kind of surrounded by majors?
It's a good question, but we certainly took our time. As I said, we've been focused on Australian-based metals projects. We have some great copper zinc projects in South Australia that we were certainly focused on, but the team always was looking for a nickel sulfide project. I have good experience as a geologist back in the day in nickel sulfides. And so we really took our time and set that criteria of what we wanted to look into that belt. And I guess certainly with Saints and Leinster, it was just a case of previous owner really wanting to focus on gold and the East Coast. But I guess it's often the case, a lot of this land holding was first WMC and then onwards, some larger companies had large land holdings. And then once you do make that discovery and start developing that resource and then eventually into a mine, a lot of those really good exploration targets that are in the rest of the tenure just kind of get forgotten about. And so it's a case of building up a significant land position in that belt again and really attacking these forgotten targets. And I guess the other main thing in that respect is, downhole EM and even ground EM, for example, the geophysical techniques have come a long way. Certainly over the last 5 years, I think EM's using now 10 times the current it did 5 years ago, much less 20 years ago, 30 years ago. So the modern day exploration techniques that we use are that much more high powered and you can use and see that much more. So a lot of deposits that might have gone under the nose of previous explorers are now being found. And
talking about acquisitions, is your target? Are there some target acquisitions to kind of aggregate your resource? This is the question, or is it more attractive to do some bold step out or deeper drilling on existing assets as a better allocation for your capital?
Certainly, I think we've got more than enough on our plate as is. And we've certainly identified some really high potential exploration targets. I think as good a target as that there is in Western Australia at the moment, and we certainly need to do the hard yards geologically and get stuck into those targets. A lot of that grunt work might be surface sampling first and then air core and ground geophysics and really develop those targets and then follow up with drilling. And we do have, I guess, which really puts us ahead of most of our peers, is we do have those base resources, high grade, massive sulfide resources on all 3 projects. So, we do have something tangible to start with and build upon. So really focused on the tenure we've got now, but always looking, if the opportunity arises, then, we'll take it.
And just finally, you've got a kind of a busy exploration period. There's a bit of a chatter. Investors always want to see results. What can investors expect moving forward?
Certainly, so in the next week to 2 weeks, we should have the first batch of results from our current drilling program. Obviously, it's quite a large program, so for the next really 6 weeks, I guess we'll have results coming through. Then we'll have the program back up at the Horn, ready to go. Obviously, with COVID, and I guess with the quite intense exploration for gold, lithium, and nickel, amongst other things, throughout Western Australia, the suppliers such as drill rigs and labs are getting quite full. So we've actually just about to lock in our drill rig for the next 12 months. So we have a rig locked in for the next 12 months. So we can really just push forward. We've got the cash, then we have the rig, we've got the people, just really concentrate on pushing forward. The rig's a multi-rig, so we'll have that flexibility of drilling RC and diamond when required.
Great, Aidan. Thanks for your time. Great presentation. We'll keep an eye on Auric Minerals.
Great, thanks, Tim. Thanks for having us.
That's all we have time for this week. Thanks again for everyone for logging in. Next week, we have Silver Mines coming on, genetic signatures, BPH energy, and a keynote presentation. So see you then.